Hi guys, this is Strange FX here. Um, this is actually the remake of our mentorship. Since we saw the quality of the other mentorship, it wasn't that deep, so we decided to remake and rearrange our mentorship so that you can be able to follow it through and learn from us properly. So guys, so the number one lesson that we're gonna be teaching is structure, right? Because no matter how much you can know and you can feel like you understand the forex markets, so but you need to know, you can have a strategy, but without structure it's actually nothing. You need to learn structure, you need to understand structure. So this is the most basic thing, or the most basic, or the most foundation thing that you need to learn when you want to learn forex trading. You need to actually start master structure, and once you master structure, whatsoever other strategy that you can learn from there would you would actually see that you are profitable. But you first need to learn structure. So how structure helps is it actually shows you the bias direction of the market. Like, it shows you where the market is trending, whether to the upside or to the downside, or it actually shows you the condition of the market, the whole condition of the market. So if you actually know structure, you would actually be able to know the whole condition of the market, right? So let's first look at this diagram here, or this structure here, right? This showing, as you can see, it's actually an uptrend. And how we see that it's an uptrend, it's because the market is making series of higher highs and higher lows, right? And higher lows, higher highs and higher lows. So if the market is breaking highs and forming higher highs and higher lows, we know that, okay, the bias direction of the market, or the structure of the market, is to the upside, right? We understand that the structure of the market is to the upside, so we trade, or we look at trades based on the structure of the market. So in this market condition, what we would wanna do is we would wanna buy, we would wanna take a buy, right? And again, if the market has such a condition where it is uh, here, where it is actually breaking lows, giving us series of lower lows and lower highs, lower lows and lower highs, we know that, okay, the market is actually at a bearish condition, which is it is breaking the lows, right? And with such, what we would wanna do is we would wanna sell, right? We would only wanna sell such a market. We would only wanna sell such a market, right? We would wanna sell, or it actually has a high probability of a win when you're only selling at this point, right? You'd be looking for a selling a selling position. So, but again, there is something that I need to tell you guys. If you're looking at structure, you don't just look at it at any time frame. You cannot just wake up and say, okay, I'm going to look at structure on the 1 minute time frame and I'm going to enter my trades, right? So with structure, you need to understand that the higher the time frame, the more the probability there is, right? So for example, we use the weekly and the daily to check structure, right? The structure of the market, so that we can have the most high probability trades, right? So if the weekly is in a bearish or bullish, let's start from the bullish momentum, right? It's creating higher highs and higher lows, right? What we wait for is we would wait for a pullback that would actually be at our point of interest. We would have a point of interest. We know that, okay, the market will never break this low here, right? It will never break this low, because if it breaks this low, it means now the structure would be creating a series of higher lows and higher highs, right? I mean lower lows and lower highs, right? Something like this. But since we know that, okay, we are bullish, we know that this is our protected low, and we would have our points of interest anywhere around these areas, right? And again, as I told you about structure, we have higher time frame structure and we have lower time frame structures, right? Again, but we will dive into that as we go on, right? Here you may find that if this is a weekly time frame, you may find that the 4-hour time frame was creating such a thing here, right? And as soon as the 4-hour time frame give us a change of structure, we know that okay, we are ready to continue to go higher, right? We are ready to continue to go higher. And this is how it is. This is how it is. This is how it is. This is how the market is. So you have an inner structure, they call it the swing structure, and we have the inner structure and the fractal structure. You can call it anything you want, but I'll just teach you structure, like the basic of the structure, right? Because our strategy, we don't trade the SMC, remember, it's just the MMC footprint. So so this is how it is, right? Once you identify the structure based on the higher time frame, you can then choose your point of interest, and there are patterns that I'm gonna teach you that you're gonna be learning, and then you can look for that, and then you can enter your trade. But what I wanted to show you here is structure. So before we can continue with the lesson, I think we should dive into the charts and see this in real time, right, guys? So here let's look at it, because okay, let us look at this, guys. Let us look at structure here, from this point to this high. As you can see, structure was bullish, right? So meaning it was creating a series of higher highs and higher lows, right? Right. So because it is like this, you can see that okay, this was a low, right? This was a low, this was a high. We had a higher high here at this point, and we had a higher low here, higher low here, and we had another high here at the top here. Okay, let me use this. We had another high here, right? And we had a low at this point. We had a high, we had a low, we had a high, we had a low, we had a high here, we had a low, we had a high, we had a low here, we had a high again here, we had a low at this point, we had a low, and then we had a higher high, and then what the market is, it broke this low, and we had a lower low, right? If we have a lower low, we can anticipate a lower high again here, and a lower low again, a lower high, a lower low. So I'll explain this: a lower low, a lower high, a lower low here, then we had a high here. So this was to show that the market is ready to reverse, but we will talk about it. But as you can see here, it took out liquidity. We'll talk about that. We had a lower high here, right? A lower low, I mean, and then we had a higher low, right? A higher low, and then a higher high, right? And we're anticipating for another high and a low, right? And then a high and the low, because now it's an uptrend. So I think you understand how structure is, right? The importance of structure, right? Here we were trending to the upside. If we were trending to the upside, and here we were trending to the downside, right? To the downside, like this, right? To the downside. So we have as you can see, we have this structure, right? This structure. So let us go back here and check this. So as you can see, guys, once you understand structure, you would know whether to buy or to sell, right? If you saw that okay, the market is breaking highs, you would wait for a pullback, and then at your point of interest, you would go to the fractal structure, and you would wanna buy at this point, and you can even target the high or what, right? That's what you can target. But let us do this as we continue. Let us do this. Let me delete everything, and Let me check another pair. Euro odd, and let me delete every drawing here. Still on the weekly time frame. Okay, this is a proper structure. So as you can see, guys, we had this low here, and then we had this high, and then we had a low here. So we had a low. Let me do this, and then we had a low here, and then we had a high here, right? We have a high. So until we break this high, if we break this high, we will have another low at this point, right? Since we haven't broken that high, our low, our confirmed low is still this one, right? Based on this trend, right? Based on this trend here, right? Based on this trend. So as you can see, guys, we have such a structure, right? Even here, if you can check the market based on these higher, like if you can check the market based on this leg here, you can see that we had a low here, we had a low, and we had a high. And remember what we said, the low got broken. Remember what we said, if it breaks lows, we know that, okay, we would anticipate for the market to like give us a pullback and give us a lower high here, and we would know that, okay, we're expecting the market to break below this low here, right? And if we enter here, we would target below this low. And mind you, we are still on the weekly time frame, right? And so as soon as it breaks and creates a lower low, we would know that, okay, we wanna get a lower high, right? A lower high. But again, what you need to note is you need to note where you are, right? You need to know where you are. Once you are at a major support level or that point of interest, you know that, okay, a reversal is imminent, right? So that's it, guys. So if like so guys, excuse me. So what you need to understand is, in a trending market, you will see either the market creating series of higher highs and higher lows, or lower highs and lower lows. That's what you need to know, right? That's what you need to know, guys, right? And in all the time frame, you will find, excuse me, such a thing. In all the time frame, you will find such a thing. You will find series of higher highs and higher lows, or lower highs and lower lows. And again, or you would find a consolidating market, which is a stagnant market, one that is not trending, right? One that is stagnant, right? So these ones are the ones that we avoid, and I'll show you how to trade them actually, but we focus on a trending market, right? On a trending market. This is structure based on based on the on the basis of the market, right? If you want to understand the market, you would understand that the market, in order for you to buy, you need to know whether the market is breaking highs or lows. If the market is breaking highs, you will buy. If the market is breaking lows, you will sell. You only sell if the market is breaking lows. If you see that the market is breaking major lows, you sell. And all that, you do it on the higher time frame, guys. We all do this on the higher time frame. So let us continue, guys. Another thing that you should note, even though, okay, let me mark this on the higher time frame. We can have a low here, a low here, right? We can have this low here and the high, right? And the high here, like I said, and the low here and the low at this point, and another high, right? Another high here, sorry about this, another high here, and we can have a low, right? We can have a low like this, right? We can have a low. So we already see that, okay, this is a trending market, right? This is a trending market, trending to the downside like this, right? It's a trending market to the downside. So but if we can shift and go to the daily time frame, we can find other trends within the trending market of the trending market, right? Within the weekly time frame, we will be able to find other trends, right? let us check this, because the market, remember, the market is fractal, right? The market is fractal. It doesn't mean that you will have to wait all this week or all these days not trading, right? But once you understand your swing structure, which is the higher time frame structure, it will be easier for you to trade even the lower time frame structure, right? So at this point, after we created this high, the market broke a low, right? It broke this low. As soon as it broke this low, it created a high, and again it broke another low, right? As soon as we break a low, we know that okay, we will create another high, right? Because that's what a trend is, right? We need to trend, and then we create another low here, right? Another low here, and then we wait for another high, right? Then we created a low again here, and then we had another high, right? We had another high here, right? Another high here, and once this high was broken, we knew that okay, the market would be creating a series of highs and higher lows, right? So that's how it is. But again, if we can also go to the 4-hour time frame, we will find the same thing. We will find the same thing on the 4-hour time frame. So as we scale into the smaller time frames, we find that we find the same thing, guys. We'll find that okay, the market is doing something similar, right? Because price is fractal, like I said, right? So once we get here, we see that okay, it's starting to make more sense in that in the smaller time frame again, right? It's starting to make more sense, as we can see again within these highs and lows. You will find that there are lows again that the market is breaking, right? Lows again that the market is breaking. There are these lows that the market is breaking to tell us that it's trending to the downside, right? We have these small lows. Let me mark them. We have these small lows that the market is breaking. These lows, right? We have these small lows that the market is breaking, and they confirm that okay, the market is continuing with the trend, right? The higher time frame, remember, the higher time frame is showing us the trend, is telling us where the market is going in the long run. But the smaller time frame, it's guiding us in a way, right? It's guiding us. Even if you can go to the smaller time frame, like the 1 hour and the 30 minutes, the 15 minutes, we will find the same thing, meaning price is fractal, guys. But what you need to do is you really need to master the higher time frame structure based on the higher time frame. Once you master structure based on the higher time frame, and you know that okay, weekly the market will move from here to here, you would have covered at least a lot of months. Maybe if like you had known that okay, the market will move from this high and create a low, right? You would have covered at least 1, 2, 3, 4, 5 months the bias direction, 5 months direction to the downside, right? So what you need to do is you need to utilize the higher time frames to understand the market structure, guys. Remember, we use the higher time frame to check the trend, to identify the market structure, to check the trend where the market is going, right? To check these trends, and once we do that, it will be easier for us to catch trends on the smaller time frame, or to catch trades on the smaller time frame, right? If you wanna be able to trade a trend, use the higher time frame to identify where the market is going. I'll show you how we use the smaller time frame, but first use the higher time frame to understand this, right? To understand structure. Remember, let me say it again, structure, when the market structure is actually knowing or understanding the foundation of the market, where it is trending or where it is going. Remember what I said, when the market is breaking highs, right? When the market is breaking highs, we know that okay, what we're gonna be doing is we're gonna be buying, because as it's breaking highs, it means it's creating higher highs and higher lows, right? It's creating higher highs and higher lows, creating this land line like this, right? It's creating higher highs and higher lows. And if the market is doing the opposite, like a breaking lows, we know that okay, what we're gonna be doing is we're gonna be selling, because the market is creating lower lows and lower highs, right? It's creating these lower lows and lower highs. It's creating lower lows and lower highs. So for you to understand or to be profitable, you first need to master this, right? Once you master the lower the trend or understanding structure, you would be able to do a lot of things, right? And this is structure, guys. This is what we talk about when we talk about structure. There will be another episode where even the next episode, actually not actually the next, I'm gonna do another episode where I'll talk about structure based on the Falcon, because we know that Falcon uses structure based on patterns, right? And because our course includes the patterns, I will show you how you utilize that to put it on our advantage. But here I just wanted to teach you structure, guys. Remember, once you're able to mark out structure, you will be able to like do a lot of things. So what I want you to do as an exercise is you go to your chart from the weekly, or you can even utilize the monthly, but you can you just point out or mark out the highs and lows, right? The obvious highs and obvious lows, and try to predict where the market can be, what next the market could do, right? So you do something like this, give us these highs and lows. Just do this on your chart, the highs and lows like this, right? So remember, this is not a low. The reason this is not a low, it's because this was a low, right? This was the low, and it's within the parameters of this low, right? It's within this range here, right? If we had a lower low that broke this low, it would have been a lower low, right? So this would be a lower low within this inner structure, right? This inner structure, which we are going to talk about next. We're gonna dive into the inner structure thing, right? But here I was just teaching you structure. So guys, on the next episode, or the second episode of this course, we're gonna be teaching you the inner structure, what to look at and how to identify the inner structure, guys. So thank you so much for tuning in, and I hope to see you on the next episode.